One of the ones we're working on at the moment is how do we charge back into Ukraine as soon as the European authorities say it's safe to fly in Ukraine again. Now, nobody knows when that is going to be. But we were Ukraine's second largest airline when the Russians invaded on the 24th of February last year. We will be Ukraine's biggest airline the week after they tell us it's safe to go back in there, because we're going to charge back in there. Initially, we have a plan to open up about 30 routes from 4 Ukrainian airports back into the European Union. And then we want to, I think, within 6 to 12 months, open up 3 or 4 large bases in Ukraine. And we're talking to the Ukrainian authorities about creating an environment, cost agreement, on which we could lead the charge of air travel into a post-war Ukrainian recovery.
Some breaking news. Amazon's Twitch unit is cutting staff perhaps as soon as Wednesday, according to people familiar with the matter. 35% of its staff, or 500 employees, to be laid off by Amazon's Twitch, the live streaming site. The cuts could be announced as Wednesday, as I said, and they come over concerns about losses at Twitch. Several top executives had left the company in the span of a few months, as we know. A Twitch spokesperson declined to comment. As you can see, Amazon is unchanged after hours. Twitch supported about 1.8 billion hours of live video content a month and is enormously expensive for Amazon. Once again, Amazon's Twitch to cut about 500 employees, or 35% of its staff.
Well, Ronnie, let's get back to one of our top corporate stories. And the Wall Street Journal was reporting that Boeing CEO Dave Calhoun told employees that the company needs to acknowledge its mistake. Boeing ended 2023 with its largest ever monthly sales haul for the 737 MAX. But that model is again under increased scrutiny after last week's fuselage blowout on that MAX 9 plane on Alaska Airlines. Our next guest says, despite the reputational hit, he expects Boeing to fare actually quite well as they accelerate their deliveries of 737s and 787s. Joining us now is Nicholas Owens, industrials equities analyst at Morningstar. So, you know, this comes almost 5 years since the fatal incidents involving the MAX. Are you concerned about the fact that these mishaps seem to be a series of shortcomings when it, you know, be it we look at things like loose bolts or the cabin pressure alarm issue?
I think in short, yes. I would say it's disconcerting, and people, the reputation of this plane and Boeing by extension has come under a series of threats. I will say that I think the actual issues of those crashes in 2018 and 2019 are very different. What we're looking at here is yet another example that's come up in the last 2 or 3 years of things that are just not quite right in Boeing's manufacturing process. And I think that has somewhat to do with COVID and the disruption to their assembly line process that the grounding had. So they're related, but it's not the same issue. But it's very disconcerting that there always seems to be another thing. And it's good to hear the CEO, saying they have to acknowledge mistakes, because I think that's an important first step to trying to regain their reputation.
When it comes to customer confidence, I mean, it comes down to the fact that this is still a duopoly, right? We have a great Bloomberg opinion piece out on the terminal today saying, well, Boeing may now be the poor relation, but it is still 1 out of 2 in the duopoly. So is it really concerning for the business, given that customers, by and large, don't have much of a choice?
Well, I think that's an interesting point in that from a financial or business point of view, fixing these bolts will not cost a ton of money. And there's not a huge number of planes that seem to be affected, at least for this issue. But as I was saying, it's the reputation that they have to worry about. And yes, because there's a very long wait list for these planes, and many airlines are their whole operation is geared around using one or the other, there's not a lot of other places to go. But I don't think that anyone should allow Boeing to be complacent because of that. They still have to be held to the highest safety standards and so on. And I think it's also important to remember that everyone walked away from this incident as well as the one in Tokyo over the New Year. And that's a testament to how well engineered and safe these planes generally are. Even when something goes wrong, there's a lot of safety systems that keep people safe, if that's any comfort.
That it does. I don't know if it's any comfort in the Alaskan Airlines situation, because a lot of that came down to pure dumb luck, right? The fact that there weren't people actually sitting, in those seats.
Yeah, and also that the door blew out when they weren't at full height altitude, right? In my view, several things have to go wrong for one of these things to happen, and that's the really disconcerting part, is that when an incident like this happens, it means that multiple things went wrong. Like you, I think, alluded to, Alaska had warning buzzers about this, about cabin pressure that they were investigating, but hadn't investigated that door yet, et cetera. So at the end of the day, those bolts should not have been loose, and I think that's going to be laid at Boeing's doorstep.
When you take a look at the metrics between Airbus and Boeing, Airbus is beating them on just about every metric, right? Deliveries, order backlog, operating profit, cash, debt, market cap. Do you expect that gap to continue to widen? Does this affect, I guess, how you rate a stock like Boeing?
Not in a huge way. I mean, they have, so Airbus has taken market share, and especially in this narrow body area, which is interesting. But it takes decades for that to move the needle, in my view, just because the products live a long time, the product cycle is very long. And in a screwy way, Airbus was also disrupted by COVID, in a way couldn't run even further ahead, if you will, because everyone in the manufacturing business has been disrupted for the last couple of years. We do think that Airbus essentially outcompeted Boeing by having a newer design airplane. The Airbus platform is more extensible than the 737 platform, and that's really the root cause of, in a way, those crashes in 2018, 2019, that they were trying to do more with an older design. This stuff and the tail fin assembly and the other things that have come out of Spirit over the last year or two, I think have more to do with a disrupted manufacturing process that they haven't yet buttoned down.
Nicholas, does this make the idea of COMAC becoming a real market contender more of a compelling narrative? Maybe not for major airlines, but perhaps across certainly emerging markets and some of those markets that we know China, already has pretty solid groundings in.
Yeah, I think, again, it takes a long time to move the needle in terms of the number of planes out there and the kinds of scale that would take a COMAC to become a real number 3, if you will. But at the margin, it's easier for some airlines to replace their 737 orders with COMACs. Again, it's going to depend for them on kind of what routes, what range, what performance they need. The COMAC is still not quite the same league of an airplane, but it can serve a purpose, right? And so at the margin, that does give some buyers an alternative to, in this case, Boeing. I think it's an easier swap. But again, it would take decades to move the needle. And even in the wake of these incidents in the last couple of days, our MOLT rating for Boeing remains wide because they're in this duopoly with Airbus. And my fair value estimate, which is a free cash flow estimate, is unchanged at $232. I already have a more conservative ramp for their deliveries than the company has stated. So if they have to slow down something or rework 171 planes, I don't think it's going to make a huge difference to the value of the stock, even though obviously the stock's been moving here on this news.
Nicholas, really great to have you with us. We appreciate your time. Nicholas Owens, Industrials Equities Analyst at Morningstar there. Vonnie, got some breaking news.
Jane Street is reeling in the profits. It came in with $7.3 billion of net trading revenue in the first 9 months of last year. The prop trading giant benefiting from market swings primarily and an expansion of its products. It's one of a select group of firms, of course, as well, that can create new shares of ETFs. And so it's working with many companies that issue them. So if those Bitcoin ETFs go ahead, for example, Jane Street would be the creator of choice for some of those shares. But once again, Jane Street in the first 9 months of the year reeling in $7.3 billion of net trading revenue. The results were disclosed to investors as part of a debt deal. And it's also showing that the company is expected to generate $3 to $3.5 billion of net trading revenue in the fourth quarter. So that would make it a $10.7 billion year in the full year of 2022. This is all according to people familiar with the matter. BlackRock, meanwhile, the world's biggest asset manager, is slashing 3% of its global workforce. The firm says 600 employees will lose their jobs. Bloomberg's Sue Keenan joins us now. And Sue, Larry Fink citing a dramatic shift in the industry as a reason.
Yeah, absolutely. And BlackRock will be reporting its earnings at the end of the week. The CEO and company president saying in a memo to staff that they're seeing profound changes in the industry, more than they've ever seen since the founding of the company. As a result, they're making changes and actually expect to have a larger staff by the end of the year, even with these cuts. Reduction in global workforce of about 3%. You have to remember this time last year, they cut about 500 workers and then had further cuts in June that amounted to less than 1% of staff. But BlackRock is among several big money managers, including Wellington Management, T. Rowe Price, that have recently cut jobs and redirected budgets in response. Executives say that ETFs have become the preferred vehicle for both index and active investment strategy, and that the firm is growing across the globe, including in Europe and in Asia. So you saw CEO Larry Fink and President Rob Kapito say in their memo that of all the changes they're seeing, quote, perhaps most profound are these new technologies that they believe are poised to transform the industry and every other industry. You have to believe they're talking about AI among these technologies. BlackRock is aiming to expand into the growing market for alternative investment with the goal of doubling revenue from private markets over the next 5 years. The firm has more than $9 trillion in assets as of September. And as mentioned, they will be reporting their earnings on Friday. Again, in the past year, it's been an interesting time because they did have a strong 2023, rising about 15%. But since the beginning of the year, shares are down about 2%.
Meanwhile, Morgan Stanley displacing Citigroup as the least loved banking stock.
Yeah, this is on the basis of Bloomberg data. We take a look at all the analyst ratings on the 6 largest U.S. banks. And Citigroup, which had been in last place, is now getting a bit of love and has been replaced by Morgan Stanley. The change came this week when an analyst at HSBC Holdings shuffled his recommendations, upgrading Citi and lowering Morgan Stanley. Saul Martinez wrote in his notes that Citi is an attractive vehicle to gain bank exposure, adding it in as HSBC's preferred choice among large cap banks. And then you got Citigroup suddenly getting a lot of love also from widely followed Wells Fargo analyst Mike Mayo. He named Citi as his top pick and said the stock could double over the next few years. Morgan Stanley, meanwhile, most analysts have recommended that investors hold the bank and not add to shares. No analyst, however, has given it a sell rating, but it is at the bottom of the pile. Back to you.
Bloomberg's Sue Keenan there with the latest. Well, coming up next, Taiwan's opposition KMT tries to rally support as it seeks to unseat a government that it says is putting the island at risk. We'll have a report from one of their rallies just ahead. This is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
Defense Secretary Lloyd Austin was hospitalized for complications from surgery to treat prostate cancer. This sheds new light on his health and mystery around his disappearance in recent days. Joining us now from Washington is national security reporter Daniel Flatley. Dan, at the very least, this has been a little bit embarrassing for the Biden administration. What's the upshot?
Right. So, as you know, and as we've reported, Secretary of Defense Lloyd Austin went in for some what he probably thought was routine surgery for prostate cancer in mid to late December, and then had some complications and was out of commission for several days and didn't inform the White House until recently. And in fact, it wasn't until today that he revealed that it was prostate cancer that had been afflicting him. So the upshot of this basically is that President Joe Biden is under a lot of pressure right now to figure out what he's going to do with Secretary Austin. He's said so far that he's going to stand by his Secretary of Defense. This is, of course, an election year, so you don't want too much turmoil at the top. But this is really sort of unprecedented in Washington, where you have a very key official at a time when the U.S. is involved in military operations all over the globe, essentially missing for several days. So I think there will be a lot more to come from this as time goes by. But for now, we have an answer as to why he originally sought treatment.
Dan, as you mentioned, it's an election year. It's also a year where the US indirectly remains engaged into active wars. Secretary Blinken's trip to Israel, his fourth since the October 7th attacks. Has any progress been made? The messaging has been pretty consistent, but also pretty different to how the operations have been conducted.
Yes, that's right. So Secretary Blinken has traveled several times to the Middle East for a couple of reasons. One is to sort of tamp down some of the regional tensions in the area. Of course, we've seen some attacks in the Red Sea by the Houthi rebels out of Yemen. We've seen some strikes on U.S. forces in Syria and Iraq. And obviously, there is Israel's response to the October 7th attacks, in which it has carried out full-scale military operations in Gaza. So Blinken essentially was telling Israel to consider what comes next and to not try to keep its boot, as it were, on the neck of the Palestinians in Gaza after whatever its operation to eradicate Hamas is over, and to sort of let the Palestinians be able to create their own government and have self-governance in that territory. This is something that Israel has talked a little bit about before. They've sort of indicated that they might want to leave some sort of a force behind for an interim period of time until new government is in place. They may potentially leave some troops stationed on the border between Israel and Gaza. But Blinken's message was basically that something needs to happen after this operation is complete that will allow the Palestinians to sort of take back their territory and to have a new government there.
Dan, on Ukraine, just to turn the situation a little bit towards that area of war. It turns out that there were some talks last week about peace and the peace process. Talk to us a little bit about what this plan is and whether it has any kind of a chance of succeeding.
Well, it's very interesting. I mean, we're heading toward the second year anniversary of Russia's invasion of Ukraine, and we've kind of entered a stalemate, essentially, where based on all the folks that I've talked to, we're looking for basically a grinding stalemate for the next year or more. And so these peace talks are coming at a very interesting time because they sort of indicate that there may be some discussions happening and that the U.S. and its allies are getting a little bit more comfortable with the idea of having these discussions at least reported in public, because initially the U.S. was very reluctant to say anything about peace talks. They were always putting the sort of the onus on Ukraine, saying we want to defer to Ukraine in terms of how this will unfold. And now you see the global South, or the so-called global South, being involved in these talks. And that's really key because it's important to keep in mind that if you look at the map, a lot of the countries that have the most population in the world have stayed neutral in this conflict. So I think the U.S. and its allies are trying to court them, in a sense, to get their perspective on how they would like to see this unfold and wrap up, and have their participation in that. So very interesting time indeed.
Bloomberg's national security reporter Daniel Flatley there in Washington with some of those top stories. And staying with geopolitics, and China's top envoy to the US says Beijing has no room for compromise with those advocating for Taiwan's independence. Ambassador Xie Feng also urged the US to follow the One China principle. Taiwan votes for its next president this Saturday. China has previously called Taiwan's ruling party's candidate Lai Ching-te a troublemaker whose views risk sparking a conflict. Well, relations with Beijing are top of mind for voters heading into Saturday's poll in Taiwan. Bloomberg's Stephen Engel reports from a rally for one of the opposition candidates from the traditionally Beijing-friendly KMT party.
It was a homecoming crush for opposition KMT presidential hopeful Hou You-yi as he rallied the faithful in his hometown of Jiayi in southern Taiwan. Hou and the other opposition candidate, Ke Wen-je of the Taiwan People's Party, or TPP, are making separate last-minute pushes to defeat the more independence-minded ruling DPP and its candidate, Vice President Lai Ching-te. It's a three-horse race for Saturday's election after the two opposition camps failed to form an alliance, a fraught union that could end up splitting the opposition vote.
I feel like the biggest room for cooperation between KMT and TPP will be the number of seats in the legislature. Our goals are the same, to switch the party in power. The DPP government has not been doing well for the past few years. People are more fearful.
That fear she's referring to was amplified Tuesday afternoon when cell phones island-wide blared emergency alerts erroneously saying that a Chinese missile had flown over Taiwan, and for citizens to be aware. The KMT was quick to latch on to the mistake.
When I first got the alert, I thought it was an earthquake. It turned out to be just a satellite. But the English in the message said it was a missile, so it made people panic. Even though the DPP came out and apologized, it never should have happened, especially now when the election is so intense. It made people feel threatened by China, as if they want to take over Taiwan. I feel like the DPP manufactured this fear.
These two KMT supporters felt the same way and see closer ties with China as a benefit, not a threat.
We need to keep good communication with the Chinese Communist Party so we won't have a war.
The two main opposition candidates agree that the DPP is putting Taiwan at risk and that they must diffuse tension across the Taiwan Strait. Now, on the other hand, they cannot show to the Taiwanese people ahead of this election that they're cozying up to Beijing too closely and that people could perceive that their efforts to get closer to China could put the long, hard-fought democracy and freedom here in Taiwan in jeopardy.
I think being closer with China for trade is not such a bad thing. But freedom of thought is what I want more. So I don't want to be closer with China.
It may be the very issue that decides the vote and sets the broader geopolitical tone in East Asia.
It's very, very important, this election, because it's life or death for the Republic of China. Because China is our roots. China and us are inseparable.
Stephen Engel, Bloomberg News, Jiayi, Taiwan.
And we'll have special coverage from Taiwan all week. Stay tuned. This is Bloomberg.
So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We do have confirmation of the Hewlett-Packard Enterprises and Juniper deal. HP Enterprise to buy Juniper for $40 per share, to buy Juniper Networks for $40 per share in cash. When it comes to the deal, when it comes to the estimated value of about $14 billion, the deal would be accretive to adjusted EPS in the first year post the close of that deal. We're seeing Juniper Networks climbing about 3% on that deal to be acquired by HP Enterprises. That the Juniper CEO will lead a combined HPE networking unit there as well. Bloomberg Intelligence saying that potential acquisition now being confirmed would help fill a gap in the portfolio to expand that data center and cloud networking presence, but potentially doesn't leverage the scale against the likes of Cisco.
The tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Julie Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
You're watching Daybreak Asia, coming to you live from New York, Sydney and Hong Kong.
We're counting down to the opens in Tokyo and Seoul.
Australia has just come online. The top stories this hour. The US securities regulator says its X account was compromised after a fake post saying approval had been granted for spot Bitcoin ETFs. Caution returning to markets ahead of Thursday's US inflation data. Treasury yields are remaining above 4%. Plus, BlackRock cutting hundreds of jobs, blaming what it calls unprecedented challenges in asset management. We do have some jobs numbers coming out of South Korea. This is the December reading for the unemployment rate, rising to 3.3%. The estimate was for 2.9%, and certainly a significant acceleration from that 2.8% in the November reading. When it comes to the number of jobs added in December, 285,000 jobs from a year earlier. Labour force participation rate at 63.8% in December. The population over the age of 15 years increased about 0.4% from a year ago. So certainly that calls into question potentially whether we see that changing the mood music when it comes to the Bank of Korea, right? Expectations had been, given how resilient still ultimately the job market had been, that the Bank of Korea would really stay at that record high level for longer. Does this now kind of cast into question what we could see in terms of the higher for longer narrative there? We did see economists from Bloomberg expecting a climb to 3%, but 3.3% actually exceeding those expectations. That record low, remember, was 2.4% in August. We are still at fairly low levels compared with that post-pandemic average, but at 3.3%, we've gone back about to that post-pandemic average level. So this will be quite interesting in terms of how much room the Bank of Korea now has to keep rates tighter for longer.
Yeah, that's right. Something the BOK is going to be tracking very closely, just continuing to monitor any signals of weakness coming through in the labour market, but one certainly just there. But here's the open we've got for Australia in the session today, and you can see A little bit of weakness creeping through, pretty range-bound as well, and it sort of follows the direction we had on Wall Street trading, given it was pretty subdued, as I said, trading throughout the course of the session. So traders are really just waiting for any sort of direction, and the inflation print, of course, is going to be the next big one to watch. Yields, again, are seeing fairly steady. We did see Treasuries holding above the 4% mark, and the dollar, Aussie dollar, that is, unchanged against the greenback at this point in time. But let's change on, because there is one data point to note in Australia. So we've got the monthly inflation print that's coming up in the next hour here. You can see the previous reading from October. That was at 4.9%. Economists, they are expecting that to tick down to 4.4% in the November reading, but still saying yes, it's something the RBA is going to be tracking closely. They're likely, though, to see once we get those quarterly figures, once we get the December reading as well. That's due just before the RBA next meets in early February, but could still continue that trend. Price pressures are coming down lower, so the RBA, even though likely to keep rates higher for longer, still something, again, they're going to be tracking closely. So inflation in Australia, of course, it's that big countdown, though, Vonnie, to the CPI print from the US.
Exactly, Belle, and we had a big rally in the Monday session, a very choppy trading session in the Tuesday session, so we'll have to see how things shape up for Wednesday. Right now, it looks like we might be to the downside, but it is very early going, and there's lots to digest for this market. For example, we just got word that Intel and is coming out with an announcement, but we also got confirmation of the Juniper Networks deal that it's going to be acquired by Hewlett-Packard Enterprises, and the moves that those companies had made in the regular session are being exacerbated now in the post-market. So Hewlett-Packard Enterprises is down post-market, Juniper up post-market, having already made moves in the regular session. Then if you look at bonds, we had Bill Gross saying today that at 4% the 10-year is a little rich. So it looks like we're going to see a little bit more reaction in the Wednesday session to those comments. The 10-year at around 4.01 in the Tuesday session. And then crude oil, it doesn't look like all that much is happening right now, but we have commentators saying that the physical fundamentals look a little bit more supported at this level, $72. It's been in a range of about $5 since December. The real action, though, the dynamite, came after the closing bell today, Heidi, in Bitcoin.
What a whiplash kind of a couple of hours it's been, right? SEC Chair Gary Gensler saying the regulator has not, in fact, approved Bitcoin ETFs, and that the agency's X account was, quote, compromised, resulting in an unauthorized post appearing to confirm the news. Let's take a look at what's been going on. Let's bring in Bloomberg Intelligence senior ETF analyst Eric Bochunas. There'll be a lot of soul searching happening at the SEC in terms of how this happened, why this happened, and you know, ultimately, I guess the market kind of moved on the rumor and sold on the fact. But what do you make of all of this?
I mean, I'm not a crypto person. I'm an ETF person, but I've been put into the crypto world for about 6 months in an intense way. And this is kind of par for the course, although this is the SEC, so it's almost like a bigger deal, obviously. But there was a couple false positives and fake news events that have happened over the sort of process of the since BlackRock filed their ETF application and today. So I'm used to the twists and turns, to be honest. That said, I think it was hacked. But what's weird about the hack is this. We're expecting tomorrow at this exact time when the tweet went out, exactly 24 hours, for the approval to happen. We heard it was going to happen between 4 and 5 p.m. on Eastern time on Wednesday. This tweet went out exactly 24 hours. It almost felt like a scheduled tweet with the wrong day, to be honest. But they're saying it's hacked. Let's assume it. They aren't saying it's wrong, though. That's notable. They're just saying it was compromised. They're not saying this is not true, we're going to deny them. It says they haven't approved them. We think they're going to approve them tomorrow, and the big reason why, they have to make a decision. ARC's final deadline is tomorrow. This is like legally binding, so they either have to approve them or deny them. If they do nothing, ARC is automatically approved. So we're expecting this to be just another weird blip in this long and crazy road onto approval. And at 4 or 5 p.m., I think we'll see this happen for real. And then we'll see these ETFs launch come Thursday morning Eastern time.
Eric, we're seeing price action in the aftermarket now take an actual direction. It looks like people just ran back to their computers, and that in the initial stages after this, there was, as you said, a whiplash response. But now we're very much seeing Bitcoin add. So we're back up above $46,000. I'm just taking a look at BITO. Well, it's not really trading, as far as I can tell, too much in the after hours. But, there are other ripple effects from this as well. Can we take from this that Bitcoin will go higher if there is an approval?
Yeah, this is tough to say. At BI, we can't make price predictions anyway. But even if I could, I would tell you I don't know. The short-term price trading of Bitcoin is hard to predict. I will say two things, though. One, people need to know that when the Bitcoin futures ETF was filed, the Bitcoin rallied up until it launched. And then when BITO launched, there was a sell-off. In fact, that's still the high watermark of Bitcoin's price, was right when BITO launched. So there is that. There was a sell the news event then. Do with that with what you will. The other thing I will say, though, is medium and long term, these ETFs are going to act like bridges to the advisor world and the institutional world. The advisors in particular, they trust ETFs. They are their preferred format for putting into client portfolios. So just the fact that these ETFs exist, there'll be some traffic on that bridge. And BlackRock and Fidelity involved really legitimize this. So we do think the advisor market, which is $30 trillion, they'll nibble at this for sure over the next 3 or 4 years. So we're thinking 50 to 100 billion in assets, let's say 3 to 4 years from now. And then 5 years, I see it as equivalent to gold ETFs, which have about 100 billion. But remember, that 100 billion is still only 1% of all ETF assets. So it's small relative to the big pie of money and funds, but it is big relative to Bitcoin's market cap.